Have you ever felt like you're always missing the right time to buy Bitcoin? The price goes up, then you think, damn, I should have bought yesterday. The price drops and you panic wondering if you should sell. I've been there too, but what if I told you there's a strategy that removes all of that stress? A beginner-friendly, long-term approach that takes the hassle out of investing. It's called dollar cost averaging, and it's the exact strategy I use almost every single day. And by the way, if this already sounds like the kind of clarity you've been looking for, smash that like button so more people can find this and stop stressing about Bitcoin timing. All right, let's get into it. When I first got into Bitcoin, I tried the same stuff everyone does: timing the market, chasing pumps, and letting FOMO drive my decisions. I'd stare at charts late at night, hoping for some magic prediction. Then I discovered dollar cost averaging. Basically, I commit to buying Bitcoin consistently, maybe $10 on a quiet day, maybe $500, or even $1,000 when I have the means. The amount doesn't matter, the consistency does. Then I took it a step further. I don't just DCA, I HODL. Never selling your Bitcoin is key. You've probably heard the term HODL, a drunk typo for hold, from a Bitcoin forum in 2013 that became a symbol for holding through anything. That's my approach. I DCA, I HODL, and I intend to hold my Bitcoin forever. Here's what DCA really means. You invest a fixed amount on a regular schedule, whether it's daily, weekly, or monthly, regardless of what the price is doing. Think of it like this, like a coin jar. Imagine dropping coins into a jar every single day. Some days it's pennies, some days it's dimes or even quarters, but over time it builds. Or even the fitness analogy, it's like going to the gym. You won't be able to bench press 300 pounds after 1 or 2 sessions in the gym. But over time and through consistency and showing up to the gym, every buy is a rep, and over time, you build financial strength. And as a father, even the parenting analogy, raising amazing kids isn't about the big moments, it's about showing up every single day. Packing lunches, helping with homework, tucking them into bed. DCA is showing up for your future even when it's ordinary. There are 3 core reasons why DCA works. It's emotion proof. No panic selling on dips and no chasing highs. Builds discipline. Wealth is often built in the mundane, not the dramatic. Leverages long-term trend. Bitcoin's volatile day to day, but historically, it trends upward. Now check this. If you'd invested $100 per week into Bitcoin since January 2020, your total invested would have been roughly $28,500. And with Bitcoin's performance in 2025, that portfolio would be worth in the 6 figures, more than 5x what you put in. And even smaller amounts matter. $10 a day, about $20,000 total, would now be worth over $100,000. Now let's compare. The S&P 500 since 2020, up around 60 to 70%. Gold, up maybe 20 to 25%. A savings account barely beats inflation. Bitcoin, when you DCA and hold, outperform them all. Now, if seeing these real numbers is giving you clarity, take a second and hit that subscribe. I make these breakdowns beginner friendly on purpose, and I've got more videos coming that'll help you build wealth without stress. People ask, should I DCA daily, weekly, or monthly? Well, daily, almost perfect consistency, but fees can stack. I like it because I'm always stacking. Weekly, the sweet spot for most consistent exposure and fewer fees. And monthly, it still works, but it's riskier if your one buy falls on a high. At the end of the day, the best frequency is the one you'll stick with and the one that works for you. This isn't about knowing tomorrow's price. It's about believing in where Bitcoin will be 10 or 20 years from now. I plant those seeds today because I trust a long-term vision. Wealth is boring. It's built from hundreds of small, consistent actions like dollar cost averaging. Every purchase is a vote for your future. I don't buy Bitcoin because I'm predicting a pump. I buy because I'm investing in tomorrow. Let's hit some common beginner questions. What if Bitcoin crashes? Then I'm happy. I get to buy more at a discount. DCA turns dips into opportunities. I buy every dip. What if I only have $20 a week? Start there. The amount is less important than the habit. Over time, it compounds. Isn't Bitcoin too expensive now? People said that at $1, $100, $10,000. Bitcoin is divisible. You can buy fractions. The key is starting. So here's the takeaway. Timing the market is a gamble. Consistency is a strategy. And with Bitcoin, consistency wins. If this video helped you, hit like before you go. And make sure you subscribe to the Smash Crypto Zone so you never miss the next strategy.